I have finally updated my stock analysis spreadsheet. You guys asked for it for the last couple of weeks, so I've finally done it. First of all, I've updated it for 2018 for the 2018 financial reports, and I've also made a number of additions that I think you guys will find really cool. So in this video, I'm just going to go through each and every aspect of the sheet and show you how to use it again, just in case you've forgotten, or if you're watching this for the first time and you want to learn how to use my spreadsheet in order to do your valuations and calculate expected return and that sort of thing. And of course, in this video, I'm going to go through the new additions that I've added to the spreadsheet and that sort of thing. So without further ado, let's just jump over to my laptop and let's get started. So of course, the first thing you're going to want to do is download the latest version of my spreadsheet. So what you're going to want to do is go down to the description just below this video and click on analysis spreadsheet link. And what that link is going to do is it's going to take you to my Facebook Messenger. Once you click that link, you'll get a message just like the one on screen. It'll say, hey, your name, and it'll say, do you want access to the spreadsheet? And below that, you'll notice that there are 3 buttons, and you can click any of these buttons depending on which spreadsheet you need. So if the company that you're researching has their latest annual report in 2018, then you're going to want to use one of the 2018 spreadsheets. And if your company hasn't reported the full year 2018 numbers yet, and the latest year that you can get access to is 2017, then you're going to want to use the 2017 one. And I've just added in a 5-year 2018 one, which means if you have a company that doesn't have 10 years of data yet, because it's a new company, then you can use the 5 years of data spreadsheet and you can just look at companies over a 5-year period. However, I would recommend that for most of your analysis, you're going to want to be looking at companies that have been operating for at least 10 years in terms of being a public business. So once you click the spreadsheet that you need, it's going to open up the spreadsheet in a new tab. Now, the spreadsheet that opens is going to be a public document that you can't actually edit. So you're not going to be able to edit this version of the spreadsheet, but what you're going to do is you're going to click File and you're going to click Make a Copy. And you're going to make a copy somewhere on your Google Drive, and then you will be able to edit that copy. And this will just be the template that always remains blank, and you can always come back to this and make a copy of it when you want to analyze different companies. So I've made a copy of the spreadsheet and I just renamed it Test for the purpose of this video. And now we're going to go through each of the sheets and enter in all of the data, and I'll show you how you can use different components. But essentially, if you haven't used the spreadsheet before, all of the white cells are cells that you're allowed to edit and that you can edit when using this spreadsheet to change certain things. So obviously you're going to need to change the sales, earnings per share, equity, and free cash flow because these will vary for different businesses. The same applies for the PE ratios, and actually the return on capital down here, you can also edit those. But for example, you don't edit the debt ratios. Those are calculated with formulas for you. So you don't have to edit anything. You only have to edit things that are white. So this is where you would enter in all of the raw data, and the 4 areas that I like to look at are sales, earnings per share, equity, and free cash flow. And you can get these numbers for US stocks on quickfs.net. And I'm just going to use Thor Industries as an example because that's one of the stocks that I hold. And if you're looking at Australian businesses and your broker is Commonwealth, CommSec, then you can get the 10 years of data from there. And I'm sure whichever Australian broker you're using, they will also have access to 10 years of data for Australian stocks. So you can find the numbers through there. But I'm just going to copy them over from the previous version of the spreadsheet for the sake of this video. So as you can see, once I entered in the data, it automatically calculated the debt ratios for me. So they have a current ratio of 1.7 and a debt to equity ratio of 0.43, blah, blah, blah. But that does that all for you. And then if you come over to the growth tab, all of this is calculated for you. So there's nothing on the growth tab that you can change. As you can see, there's no white cells. Everything is gray or a different color. So everything here is just automated for you, and it shows you the growth of the company over different periods of time. First, it has the growth of the company over a 1-year period, then a 3-year period, then a 5-year period, a 7-year period, and a 9-year period. So what is their average growth over these periods? Then we have the value matrix, which is the next part. And there's a couple of things you can enter. You can see there's 3 white cells here. So you're going to need the earnings per share for the trailing 12 months, so the last 4 quarters. The time frame that you're looking at I usually look over 10 years, and then the current stock price. So for Thor Industries, that would be these, and I'll just copy them over. And you can see that it's calculated it for us. Now, if you've used the previous version of the spreadsheet, you would notice that these cells down here are now white, and they weren't before. So now what you can do is, essentially, what happens is when you just load up the spreadsheet, it's going to automatically calculate these numbers for you from the growth numbers on the growth tab. However, if you have a company that has negative earnings or some kind of negative number over the long term, those numbers won't actually work. So I'll just show you. If we give Thor Industries a negative 31 cents for 2009, and we come over to the growth tab, you can see that, of course, we can't calculate growth if there's a negative number, because you can't calculate growth if there's a negative number. So what that means is that these are not going to be able to be calculated. So you're going to have to go in and manually enter them. And you can do that now. So now that they're white cells, you can enter them in. So you could put 5% there, you could put 10% there, 15%, 20, 30%, whatever kind of growth you think the company can do. And of course, you always want to be conservative. But of course, you only need to edit these 5 cells here, and the 5 cells above it will automatically change for you. And essentially, we've got this top table which tells you what return you would get each and every year if you bought the stock at the current stock price, which is over here, and if it grew at a certain rate and had a certain PE ratio. So it's giving you a range of outcomes for a stock. And on the bottom table, it's pretty much the same thing, but it's telling us, depending on the growth and depending on the PE ratio, what will the stock price be in 10 years' time? And that gives us a range of different stock prices, so we can sort of work out what to expect from a business over a 10-year period. So next we've got the buy zone calculator. Again, you need to input a little bit of data. So we need the earnings per share, we need the time frame, and we need the stock price again. The stock price is actually 70 at the moment. Now you can also change the margin of safety and the required return. However, if you're a beginner, I recommend you leave these at 50% and 15% respectively. But essentially, you've got the auto buy zone calculator and the manual buy zone calculator, and then I've got the payback time, which I just added, which we'll talk about in a second. But the auto buy zone calculator basically generates an automatic growth rate using the long-term growth performance of your company. Now, because we changed Thor's long-term EPS to negative, it's not going to be able to calculate this. And if you get a business where you can't use the auto calculator, don't worry about it. You can just use the manual calculator and enter in whatever kind of growth you think the company can do over whatever period you've entered in over here. So we're talking about 10 years. That would mean 15% per year for the next 10 years. Even if you're using a stock that does automatically calculate the growth rate for you, I would make sure that you're comparing this with what the analysts are saying and making sure that you're not being too unrealistic. For example, I would never use a growth rate over a 10-year period that's really above 20%. So you can see that for Thor Industries, it's calculated 25%, which is incredibly unrealistic, especially with where they are right now. A more realistic number would be somewhere between 10 and 15%, or maybe 8 to 15%. So then that would be where you would use the manual buy zone calculator. And essentially it gives you what the fair value is. So that would be what its current value is, depending on its growth and its PE ratio. It gives you the buy price, the price that you should be willing to pay for it. And then, of course, it's got a sell price. I personally don't really sell when a company hits its fair value. I've just chucked that in for the sake of it. But generally, I wait for a little bit above the fair value before I start to sell a position. And then we've got the new addition for this version of the spreadsheet, which is payback time. And this is another method taught by Phil Town. So all of these methods here are used by Phil Town and taught in his books. So I recommend you go check him out if you're interested in learning about these more in depth. But of course, I talk about this all the time on my channel as well. But basically what payback time is it's going to calculate if you owned the entire business, how long would it take for you to recoup your money after buying the entire business? And when we're talking about recouping money, we're talking about free cash flow. So how much cash flow can this business generate after we've paid for all expenses and maintained the business? Now, there's only one way to sell here, and that is to enter the market capitalization for your company, which is basically the price for the entire business. For Thor Industries, that is 3.69 billion. And it's important to note that I've got here in millions. So all of these numbers are in millions. And if you want this to work, you need to take the market cap and divide it by 1 million. And make sure that when you're in your data input table, you can see it says million, million, million here as well, that all of these numbers are in millions. So these are actually not right. That should be 328 million, 304 million, 389 million, and etc., etc., etc. So you want to make sure they are in millions. And then you want to enter in the market cap in millions. So 3.69 billion in millions is 3,690 million. So then it's going to calculate how many years it would take if we bought the business for 3.69 million and they generated 328 million of free cash flow each and every year. How many years would it take for us to recoup our money? And the payback time for this company is 11.24. And I've also got here a decision, whether it's a buy or a sell. And basically the cutoff I've got is 10. So if the payback time is less than 10, it's going to say it's a buy. And if the payback time is above 10, it's going to say it's a sell. And then lastly, I've just added this in because a couple of you requested this. This is the spreadsheet that I use in my portfolio update videos when I talk about what my holdings are and what percentages they make up in my portfolio. So you can come along here and you can enter in all of the stocks or cash or whatever you're holding, their values, and then it's going to break it down nicely in a pie chart. It's pretty basic, but I thought I would add it because it's something that a number of you asked for. So I hope you guys enjoy the update. Again, if you want access to it, it's linked down in the description below this video. You just click it, it takes you to Messenger, and then I will send you a message automatically. It's my chatbot that will send you a message and it will guide you through what you need to do. Now, please be aware, I'm just one person. I don't have a company or anything, so I'm doing all of these spreadsheets myself. So there is the chance that there are errors in the spreadsheet. So if you have any problems, just send me a message or leave a comment on one of my videos, and I'll be sure to check it out and make amendments to the spreadsheet as we go along, because it's really just going to be you guys sort of testing the spreadsheet and telling me if one of the formulas is giving you an error so that I can fix it, because I can tell you that I've gone through it very thoroughly and I've tested out each formula multiple times, very tediously, many hours of that, but there's still the chance that I've made some mistakes. So just please be aware of that. And if you do have any issues, don't hesitate to message me and I'll be quick to get back to you. But that's all for today, guys. I hope you enjoy this, and leave a like on the video if you enjoy this and you want to see more updates to the spreadsheet more often, because I can certainly do that. And I actually quite enjoy making these spreadsheets and sort of updating them and making them as efficient and helpful as possible. But let me know your thoughts down in the comment section below. If you're new around here and you want to see videos on how to invest and me talking about different stocks and analyzing stocks in depth, I don't see a lot of channels on YouTube going in depth into businesses and talking about the analytical side of stocks and actually talking about their valuation. So if that's something that you're interested in, make sure you hit that subscribe button and hit that notification bell so you don't miss out on any of the future videos that are coming out. But for now, guys, I'll see you in the next one.